Welcome, Samantha. I'm so excited to have you on the Be the Solution podcast today.
Thank
Let's
you.
go. Oh, you're welcome. You're welcome. So, we're going to jump right in this morning on it. Okay. We know the market shifted and it's been this way now for a couple years. What things are you doing differently to attract more clients and get property sold?
Yeah, it's definitely been interesting and challenging in many ways. Yeah, I would say about 2 years since really since the first rate hike in what maybe fall of 22. So we're at about 2 years since then, and it's definitely been the word I used has been whiplash, a whiplash of a market change. But it's been interesting, and I've learned a lot. And what's working now, I think I was saying to you recently, is what's working now for me is the same things that have worked from day one. I really haven't changed my process, which I think is important. I do all the same things. I'm sure there's subtle shifts and 80/20s that I do in my process regardless of the market, just to grow as a professional. But um, really, at the end of the day, the same things that I've always done still work today, which is getting up every day, making my calls, doing my emails, doing my texts, doing my in-person meetings with clients, doing my networking events, looking at deals, analyzing deals, pitching things to clients, and I just do the same thing every day, and that
So
seems
what does that look like for people who don't know what it is that you do? How,
sure. Yeah.
what's your
So
day? What is your day? How's your day structured? How many people do you meet with? How many people do you talk to?
yeah, it definitely fluctuates, depending on the day, the week. But generally speaking, I try to have, I guess, like a skeleton of a calendar that I work with. So if you go on my Google Calendar right now and you skip forward to February of next year or October of next year, there's already time blocks filled in right now. I just have blocks of time in different colors just filled in on my calendar. And then in the beginning of every week, I make adjustments based on, oh, okay, me and Maria are going to get coffee on Tuesday. So, adjust that day and so on and so forth. But I have the foundation laid out. And what that foundation looks like is I want a certain amount of hours of prospecting, which is dedicated time that I sit down and go through my database and make all my follow-up calls, reach out to, if I want to do cold calls. It doesn't matter what type of prospecting, just whatever ideas I want to do, that's the time I'm going to do it, whether it's calls, emails, texts, things that are direct outreach to potential sellers and buyers. So that's my
How,
prospecting. Yep.
how many hours a day, or do you think you do that?
Actually, let's see. I can tell you right now. Let me go forward a couple weeks in my calendar and see. So I have maybe 2, 4, 6, 8, maybe about 8 to 10 hours blocked off in a given week for pure prospecting. Actually, sorry, I separate my prospecting into two buckets. So really, I have 4, 8, 12, maybe closer to 16 hours total blocked off. But what I do is I separate it out into 2 hour chunks of time. So it's not like, okay, Tuesday is, 8 hours straight of prospecting. It's these little 2 hour chunks that I put throughout the week, but it's about 16 total.
16 total hours.
Yeah. And that's kind of like a dream if I can actually get 16 hours in a week. That probably rarely ever happens. So I just went forward a couple weeks to see what my base skeleton is. But if I go back to, let's say, a prior week that's actually real, let's see, it's more like 2, 4, 6, 8. It's more like 8. So basically, I'm aiming for 16, but then a reality week ends up being like 8 because again, I maybe have to delete one chunk of time to put in an event or some type of something else that's come up, right? So if I land somewhere around 8, that's probably like a normal week.
Around 8. Okay. So what do you think that the biggest challenge today is in on the commercial side? And you mainly do development deals and commercial real estate.
Yeah, the biggest challenge has been definitely the capital market side of those
Mhm.
deals, meaning the debt and the equity, and more specifically, I would say the equity coming into those deals. And that's all really driven by, I would say, primarily the interest rate spikes that we've seen the last couple of years. There's also been I do a lot of work with developers, and so construction costs, cost of materials, things like that. That's gone up a lot the last few years, but I mean, that happens regardless. I think the main driver has been the interest rates and the impact that that's had on how properties underwrite and how returns really look in these deals when you're sitting down deciding whether to make a decision to buy something. The underwriting, the projected returns have just been sort of squandered by the fact that the pricing, sellers asking pricing for the property really hasn't changed. Cost to build or renovate the property hasn't really changed, gone up. But the valuation on the back end is
Yeah,
questionable. That we've had all these changes, and you plug in these higher interest rates, and there's just no juice left to squeeze when you make all those adjustments. And so it's been this fight the last couple of years to then say, okay, well, how do you make this work? Well, you can always drop the purchase price down. So easy solution, right? Go back to the seller and say, we can only pay you X amount. And that conversation has not gone well for 2 years. You just haven't seen a lot of sellers willing to concede to the point that works for buyers. And for a lot of different reasons. And so it's been sort of a frozen market, I would say, in the sense that you have buyers who want to buy and you have sellers that want to sell, but they just aren't able to meet on price and terms. And so we're just in this weird frozen market where everyone's trying to make it,
yeah,
but if no one
no
really
doubt.
to, like, the buyer
You
doesn't
hear
have to buy, seller doesn't have to sell. So
you hear this, right? I'm sure you hear this. If they gave me the land for free, I couldn't make the deal work.
still wouldn't work. Yeah, at the end of the day, that's just what's happened in a lot of cases for development. There's a few exceptions to that. There's a few buckets in which it can still work. A few of those being low income or subsidized development projects. Those really are kind of like not reactive to the market. That they don't require the same types of returns necessarily. So I've seen I sold a site maybe a year ago that I know the buyer was planning to do low income housing tax credits. And so that just makes it sort of a different thing. But that type of development comes with its whole own set of challenges. It can take years to get those things approved and out of the ground. And so, sure, maybe the numbers work in theory, but it might be like a couple years before, you get it done, like even approved. So that, and then I would say I've also seen a lot of folks building stuff that they already had purchased years ago that they had been land banking, and now they can, pull the equity out um, to make the numbers work and get a project going if they have the capital to put into it and they really want to see it done. And the land was, acquired at a good price a long time ago. So things like that. And then I've seen a little bit more of a shift to suburban markets where
Yes.
a lot of the fundamental numbers still have to work. It's not like all of a sudden it's a magical, pro forma and things are, 10 times better, but you do have a few kind of key factors that make the suburbs a little bit easier on the pro forma. Again, comes with its own set of challenges. Zoning in the suburbs is very hard. Lots of other, challenges to face, but I would say those are kind of the buckets I've seen stuff still getting done in, but it's so much less. There's just so much less development activity, so much less construction activity that is going to be happening over the next couple of years. It's kind of a trick to the eye. I have people still telling me all the time they see people driving, or they're driving down the street in Philly and they're like, "Well, I'm confused. There's cranes everywhere and there's buildings going up everywhere." But those decisions, those projects were all conceived of,
Three
before
or
all the changes happened. So
yeah,
yeah,
3, 4, 5 years ago.
yeah,
Because of the time you scour, you search site, you lock it down, you do due diligence, that's it, and you do zoning, that's a
yep,
year of time. Then
easily.
you close, you get construction, your construction financing, then you have to get your permitting. A lot of times you have to close before all that because sellers won't wait that long, but I suppose some will for the right price. Now we're 2, 3 2.5 years in some cases. Now, if they already have it and they already have permits in hand and they already have tax abatements, they have to build or they have to forfeit.
Exactly. Yeah, and that's kind of what I'm keeping my eye on the last year or two is like I know there's a ton of sites sitting out there that have gotten to the point of getting entitled, but I am seeing kind of a mixture of things pan out there. I'm seeing a lot of things get stalled. Not everything just because they already got it permitted doesn't necessarily mean they may get stuck on getting it out of the ground for any number of reasons. Whether there's multiple partners in the deal and now one doesn't want to do it and one does because of what's happening in the markets. You have partnership type disputes. You have lack of being able to find the equity. Maybe they had the equity to get it to this point, but not the extra needed to build it. So I'm seeing a lot of stuff get stalled. I'm seeing a lot of people come back around to me saying, hey, let's, maybe we can sell this project instead of build it. There's a lot of that. But of course, there's a lot of challenges to selling, an entitled site right now to another buyer. So yeah, it's definitely challenging.
Do you see people buying in like around the American Street corridor, like off of the corridor at for shovel ready projects? Do you see developers purchasing these at this time?
I do. Yeah, I definitely still see a lot of interest or demand from buyers, developers in this corridor. But basically, everything from like Old Kensington through Port Richmond and everything in between, Fishtown, East Kensington, West Kensington, all these neighborhoods that we keep changing every day. Another part of East Kensington is now Fishtown, but that whole section of the city, I still
Not
see.
if you're from Philly.
Not if you're from Philly, exactly. Yeah, you have somebody from
A
out of
lot of
town.
people that and I'm born and raised Philadelphian,
Me too.
so
Yeah,
you can't trick us.
you can't trick us. Yeah, someone sent me a deal the other day, and it was like front and Lehigh area, and they were like, "Oh, it's this like deal in Fishtown." I'm like, "That is not Fishtown," but yeah, it's interesting how
Front and
these
Lehigh, definitely not Fishtown.
definitely not.
So what do you think somebody can pay per unit?
I'm if generally speaking, actually, I did a whole like report on every single multifamily development site that I could find that traded in 2023. I'll try to do one again for this year, but I did one from last year, and I took every deal I could find that I could confirm had traded at a price that was either entitled for multifamily or was intended to be built into multifamily. And the average of the entire city came out to around like 40K a door for the land. Again, that was a
Mhm.
mixture of, shovel ready, not shovel ready. That was like the overall average. That included some deals in center city and prime areas that skew the numbers up. But I would say in like an area like I actually live near the American Street corridor in Fishtown or whatever we want to call it. So this area of the city, I would say north of Fishtown, if you're East Kensington, West Kensington, I'm seeing more anywhere from like 15 to 30,000 a door for the land, depending on how expensive of a build type is it and how many units and is there is the old tax abatement, no tax abatement, all these different factors. But that's like I would say the range that I'm seeing. I've definitely seen some trades that were anomalies that I can't understand, and I've seen some stuff sit out there forever and not be able to sell, even if it is at that price. So it's kind of a mixed bag. I think the other factor there is the pool of buyers for development sites right now has shrunk so much that oftentimes you can put something out there at the right price and still have it sit for 6 to 12 months because there's just so few. Maybe the one guy, girl that was going to buy it just bought the one other thing and now they're out for a little while. So even though
Right.
the price is right, you just have so few buyers for those types of things. That can really make it work. I have people calling me all the time asking for sites, but when you really start sending them deals, you realize, okay, it's the people that can actually pull the trigger and move on something is very small.
It's very small.
Yeah, smaller than it was before.
Yeah. What do you think the percentage is down? Like 10%, 20% of people?
Oh, that's a good question. I don't know. I thought you meant like on value. I know I would say I feel like the values on land when I underwrite them, at least my opinion is they've come down at least 50% on average. But in terms of like how many buyers are out there, I don't know.
Yeah.
That's a good one. That's a good question.
Yeah, I question. I mean, okay. So I talk to a lot of people too. Right? I do
Me
prospecting.
too.
Okay. Last week I did a challenge, Samantha. I did 100 dials a day for
Wow,
5 days in a row.
that's a
I
lot.
talked to 136 people,
Nice.
more than 2 minutes. Anyway, I have a mixture of residential and commercial. So we do the mixture. But so many people, most of them are not buying.
Yeah.
So I wonder what the percentage is. And probably realistically having conversation with a seller who has a site that is shovel ready. I mean, I think it could take up until the springtime to sell it.
Yeah. For sure. Yeah, the time on market for that type of product is so much longer. Again, even if you have it at the right price, even if it's shovel, all the right things. Yeah, I think it's just you have to expect a much longer marketing period to find the buyer because there's just so few of them out there. I mean, I've definitely sold shovel ready sites as recently as this year, as recently as last quarter. Like they're still trading. It's just so
Right.
hard.
But so if you have one that's over 50 units, are they trading over 50 units or under 50 units?
Both. I think I've seen both. I think I haven't seen as many deals over 50 units just in general going around. I've seen some, but I haven't seen. I try to think in my mind, just like anecdotally for myself, how many deals are even coming across my desk? Like how many things am I seeing? And I feel like I just haven't seen as many of those 50 plus unit deals floating around. Definitely some. I've seen a lot of them. In more like B minus C plus areas floating around. And I think those are really challenging to work with. But in terms of the prime areas where I'm seeing a lot of development, there's just been not as many of those coming across. I'm seeing a lot of like the smaller ones floating out there. And I don't know if that's a factor of the ones that are larger, that the developers want to hold on to them. So they're letting go of their smaller stuff to, be able to try to pull equity out and put into the larger stuff.
Sure.
Um, but yeah,
And that makes sense. Do you think that the players have changed in the market?
yeah, I think so. Yes and no. I think there's been a net, just like we were saying before. The pool is smaller, so I think that the main thing has been so many players have just exited. So there's just a lot of them gone, which changes the
Yeah,
dynamics. And then I think what you have
a
left,
lot are gone.
a lot of
Some
gone.
went, some went to other real estate areas like Jersey Shore,
Yeah, build townhouses,
Reading,
Jersey Shore. Yeah,
Lancaster, Lehigh Valley,
yeah.
Florida.
Yeah, a lot of movement to Florida and Jersey Shore. I guess that's and you're right. Those other
See,
areas as well. I've heard a lot about Reading lately, and just buying smaller single family rentals or doing some plays out there.
so you've heard the same thing. So that's what, excuse me, that's what I've heard
Yeah,
over the last year and a half.
yeah, it's
And
interesting.
these people aren't coming back, by the way.
Yeah, I don't see it either. Yeah, I think that's been a huge change uh, in terms of players and who's still out there. It's just that exiting or shifting, where they're leaving the Philly market and going other places. And I think what that leaves is that there's on one hand there's the few players that have always been here, always will be here. They're the core players. That
Yeah.
there's those folks. And then I've also been using this other term. I have all my little terms that I say to myself in my head. The new blood or the fresh blood that's coming in. I feel
Sure.
like this year more than any other year that I've been in the industry thus far, I've had just people out of left field that I've never heard of, buying a deal that I've got or whatever. And I'm like, who are you? Where did you come from? Where is this money coming from? And I think it's interesting. My thought process around that is, well, they're entering the market with like a fresh energy. They have a fresh set of eyes. They're not jaded by the changes that have happened the last couple of years. So they don't care about like, oh, now things are penciling to a 5 instead of a 7. And how are we going to make these deals work? Like they're not, there's no frame of reference for like what was and what is. They're just, look, we like Philly. We're coming in. We're going to make this happen. I'm like, all right, which is
I
great.
like that. There's
Yeah.
no frame of reference
Yeah.
of what was and what is.
Yeah. Because it
Because
doesn't
it's
matter at the end of the day, right? Let's not, if they can make the deal work,
yeah,
they can make the deal work.
it's all about perception too, like what you're used to.
Yeah.
So you're
Absolutely.
used to this and it just doesn't work. And some of it too is some of these people they've scaled up, so they have more employees, they have more cost that make their deals have to be, tighter.
Yeah.
Um, and some people are more nimble,
Yeah.
like you can be nimble, you can shift your business because you have a smaller boutique company. Myself, the same.
Yep.
We're a smaller shop, but we have the ability to zig and zag.
Yep, absolutely. I'm grateful for that. These, especially in times like this, where we don't have some huge operations that has a huge overhead, where we can be nimble and be boots on the ground and see what's going on and have the ability to shift with it. I think that's really important.
I do think, and I'm curious, like your thoughts on this. I definitely am putting more time and hours into my work of calling and events or whatever, prospecting, networking, 20 years in the business than I have in the last 10.
Wow. Yeah. Yeah, I would say the same. I mean, I think it's like back to basics time, right? Like right now. And yeah, making those calls and doing the follow up and being in front of people. I mean, that's what works, and I just have to kind of double down on it in times like this.
So my saying is, and I've been saying this since 2007, work works.
Yeah, work definitely works.
Work, work works. So, like, if you could wave a magic wand and you knew what was going to happen next year, do you think we're going to be a little bit better on the commercial side of the bit on the development side,
Good
or do you
question.
think it's more of the same?
Um, Good question. My like gut feeling is that next year will be a good year. I don't think it's going to be an insane shift. I don't see anything huge shaking loose like overall in the market, but I think that we will. I think there's a lot of pent up demand from buyers to buy things. And I think that, some sellers are finally getting to the end of the road on holding out on things. And so I see a little bit of that starting to shake loose next year. I feel like 2026 really may be a year for the market coming back around to, as and it depends on what metric you're looking at, I guess, right? Like, if we're just talking about like volume of trades, like how many deals are actually going to get done. I think that I see that really starting to pick back up a little bit in like 26, 27. I don't know if 25 is going to be, doubling or anything. But I think that some more deals, it'll be a trickle of some more deals starting to shake loose. Because I think it's the end of the road. 2 years of not being able to, sell this property that you've been trying to sell or buy anything, something's got to give.
Something's got to give
Yeah.
eventually. So, what they did, a lot of the bank, they keep extending loans.
Yes. Yeah, that's been interesting. I'm curious that's part of what I'm wondering will happen next year is if we see more lenders finally, and I've seen it happen already as far as, some of the smaller private lenders that, my clients work with. I know there's some foreclosures happening. I know there's, stuff hitting the market that's been taken back as REO. I think it's happened on a small scale and it might not even be noticeable, but there's a ton of debt in default out there. It's hard to see because I think when there's these websites, resources you can go to pull foreclosure data, right? But the types of loans that are in distress right now are not necessarily sourced on those websites because they're the private loans that don't get pulled to those typical sources.
They're
So
not
it's
they're not recorded.
yeah, I mean, obviously, like the mortgage itself is recorded on the city records, but
Yeah,
it doesn't get like they're not CMBS loans. They're not like Fannie Freddie loan. It's like these, the hard money loans, the private loans where
right.
they don't you don't there's no recording of the default. So you don't I'll get phone calls
Oh,
from
right.
neighbors
There's
that
no
I
recording because they could have already signed a deed in lieu.
And exactly, deed in lieu, or like you said, they're kind of they're smaller shops, and so they can call their borrower and say, "Okay, we'll give you 6 more months." Like they're making these decisions kind of just quietly. There's not anything like recorded going out like like a sheriff sale, 30 day, 60 day. There's no notices necessarily that are like publicly available or that you can pay for to get. The only way to know that's happening is just like you and I. We talk to so many people, so it's happening in the background. And I'm getting calls all the time, like, okay, we got another extension on this loan, or I'd really like to, get this borrower to sell this off, or we're thinking about taking it back. Like you're hearing all of it, but it's not coming to fruition yet. It's not sourceable data.
Yeah,
So I'm
I
curious.
think I think that in residential, it happens first, and there's definitely been a lot of half projects done that have been out there online.
Yeah. Yes, a lot of those. I've seen a lot of the half done project.
So commercial usually falls behind residential a year. Yeah. Um,
Yeah.
it's slower. The runway's longer.
Yeah,
It's a
absolutely.
longer runway. So, people ask me all the time, when's there gonna be deals to buy?
Always. There's always deals to buy, right?
Exactly. There's always deals to buy.
Yep.
So how has your business been affected? Have you seen your business go up, stay the same, go down in the last 2 years?
Yeah, that's what's interesting. Again, I guess being I'm newer to the industry, I'm about 5 years in, and so if I look back at just myself personally, me and my team's volume, we've actually over that time, at the same time that the market has changed, we've still gone up. Maybe not as much as I wanted to after the rates started going up. I might not have been able to hit every growth goal, but like it's still been an overall upward trend because of the fact that we're just starting out. And so again, regardless of what's going on in the market, I started out day one, had a plan, and have just kept going with it, kept doing, like we talked about, calls, hitting my metrics, doing my calls. And so
Yeah,
seen, this year was one of my, biggest closings. Our average deal volume has gone up. Like there's all these ways in which, we're still seeing progress and growth in the back end. But I think that's kind of what happens when you're a small company that's just doing your own thing, growing, regardless of what's happening in the market. There's definitely been a ton of challenges, and I still have a lot ahead of me that I want to achieve and grow. But yeah, we've pretty much still been on that same
that's
trajectory.
awesome. So you said you had your biggest deal. What was that?
We did a mixed use building in Midtown in Center City. It was the first building that I had sold that was in the Center City core. I've been doing a lot of these land transactions for years that are in the more what would you call them, like the tertiary, the West Phillies and the North Phillies of the city. So this was the first deal that I had done in the Center City core, which was exciting, just like a new,
Ah,
finally break into a different neighborhood. Typically I do land, multifamily. This was a mixed use building that had a restaurant in it and like a small office and studio space above. So it was different product type, different neighborhood. Yeah, so that was exciting just to, have a deal that was still us experiencing progress for us. And we were excited about it, even though, again, whatever's going on in the whole market, that was still a first for us.
that's awesome. How much was that for?
That was 2 million.
Cool.
Yeah.
Congrats. Good for
Thanks.
you. Awesome. So you think for next year, going to stay the same? You have, are you growing? Are you just like, okay, that's because we're in next year right now. We're
We're in
recording
next
this
year.
in,
Yeah.
in mid-October. We're basically in 2025. So anything that you take now, I mean, you take year-long listings.
Do I?
Yeah.
I usually don't. I usually put 6 months on it, and I prefer to put a shorter timeline on a listing. But I mean, going back to our discussion earlier, it is taking longer for stuff to sell. So usually I just stick with a 6 month timeline and then extend if needed, reevaluate. But I mean, there's going to be stuff that sits for a year. Yeah, for sure. But as far as next year, um, I still see growth for next year for sure, at least for our team. We have even though we've had our one big deal for this year, we do have even larger deals under contract in the works, and so I still see us being able to continue to push and grow forward into next year, not without challenges, but yeah, I think there's definitely still opportunity and growth ahead in 2025.
That's great. That's great. Do you use a real estate coach, a business coach?
I don't know. I've used different coaches in the past, but really for me, what's always been the most helpful is what I would call my mentors. So not necessarily coaches, but people that either I have worked for or work with that are more experienced than me and that I can go to and for more mentorship. I would say I kind of
Mhm.
coach myself in a way. I like to do things my way, but having mentors has been really important for me.
Mentorship is really important.
Yeah.
I actually wish I had more mentors.
Yeah.
I need to go find some.
Go
If you
find some.
know anybody who wants to mentor me. Um,
Definitely. Well,
yeah,
one
I
great.
think I do have a coach. In fact, my coaching call is right after this podcast. So
Hmm,
every Wednesday morning.
nice.
But I am going to expand on that and what I'm doing with that as well. And I'm excited. I think you know, you have to believe that it's already whatever you want it to happen, it's already happened. It's a
Yeah.
consciousness.
Yeah. It's like a manifesting, right? Yeah. I
It
love
is.
um, the for anybody out there. One, I'll give a shout out to a nonprofit that I'm affiliated with called TheFreckled Strawberry. It's run by a woman named Carly Meyer Bentley, who's a career financial advisor, wealth advisor, and she sort of had a whole career and kind of left to start this nonprofit called the Freckled Strawberry, and it's it's financial wellness for women entrepreneurs, and she has a coaching program basically that women go through so they can. It's totally free to any woman. She signs up and goes through the 7 stages of sort of mentorship. And a lot of it's focused on in the beginning personal finance, but then she helps them with career, business, things like that, and helps them grow. And she helps women who are starting a new business, who are trying to grow a business, who might be trying to exit or sell a business. And then other things too that we don't think about, like women who may have recently become widowed and now have to take over a business, or all these different types of situations. It's just
Oh,
focused
wow.
on women and all of their unique needs and helping them grow financially, professionally. So the Freckled Strawberry, highly recommend.
I love that. I'll have to check it out. Is she local to Philly or?
She's she's like in the suburbs of Philly. Yeah, so she's local
Oh,
to the area.
cool.
Yeah.
She would be great podcast. She'd be great to have on
Yes.
the podcast. Maybe you can make an introduction.
Absolutely. Yeah, she's fantastic. And
Awesome.
she's always been one of my mentors, so that's why I thought of her.
Oh, I love it. I can't wait to talk with her.
Yeah.
Okay, before we wrap up, Samantha, I have 2 questions. 1, guilty pleasure.
Um, binge watching TV shows. It give me some, Selling Sunset, or I've been binge watching Catfish, like just TV that's not super enlightening, but it's just so addicting and easy to watch. So yeah,
Okay, so I get it. It's like bubble gum.
yes, Yeah, just put it on in the background, like, "What's happening?"
Yeah. Okay, number 2. What are you most excited about for your future?
Ooh, good question. I'm looking forward to doing some of my own projects again. So we, talked about the market and real estate. Obviously, we're both in sales and brokerage, but I've also invested in some rental properties myself over the years. And done fine. Kind of took a pause on it the last couple of years, focusing on business. But that's something I'm looking forward to getting back into. Maybe doing some, even just some residential flips, or I'm not sure. Play around with some ideas, but want to get back into some personal investing again.
That's cool.
Yeah.
Yeah, it's hard to I think investing in real estate, obviously, I believe in it. The problem is that it's a whole nother business
Yes,
and we
exactly.
have other businesses. So it's people just think you can just do it. Okay,
Yeah.
just buy a building and get the rent. It doesn't work like that. And the headaches,
Yes,
you
I
have to,
learned.
it's not for the faint of heart.
It's not. I
And
learned that
I
lesson
wish
the
more
first
people understood it because and really, what the worst part is when they take their house and they decide to become a landlord and then the
Yes.
tenant doesn't pay rent and trashes the house.
Oh yeah. Yeah. I've been through it all last couple of years. Evictions, construction budgets going over, all the problems. Losing money on a flip. Anything you can imagine that goes wrong. I've experienced all of it. Come out alive. I'm still here. And still did well in some places, not so well in others. But you take those lessons and take a pause sometimes. And I'm still excited to get back into it, but with the new understanding that yes, it is not easy.
It is not easy. You really have to be really careful about what you're
Yes.
doing and who you're partnering with.
Yeah,
And
absolutely.
I say that because I've experienced it myself, lost hundreds of thousands of dollars. Like, it happens. And I tell people all the time, a lot of times people feel bad about it. I say, don't feel bad. Don't be embarrassed. Like, it
Yeah,
happened to me. I've been
happened
doing this for, right? Happens to Samantha too. It happens to a lot of people. Anyway, it was fantastic having you on the show today, Samantha. Thank you for being the solution. You are a bright, bright woman who has a massive career ahead of her, and I really acknowledge your growth over the years. And it's good to have you part of our community.
Thank you so much, Maria, for the kind words. I'm so happy to be here. Thank you for being an inspiration. I appreciate the opportunity to come on and chat with you this morning.
Absolutely. Let's go get them.
Let's do it.